take a look at this S&P 500 1-hour chart from last week, you can see here all the way since the initial candle on Tuesday to the end on Friday was just straight green. Every single hourly candle except for this one here, and really this was a nice pickup candle as well that helped with the continuation. So really rare, first of all, to see a chart like this, and second of all, what's even more interesting is there was a lot of put buys on the S&P 500 and QQQ. You can see all of these here. That's very weird considering this chart. So throughout the entirety of Friday, like all of this over here, we saw a lot of those puts being added. So really within this 552 to 554-ish range, there was a lot of puts being added. So that's something that, first of all, I'm going to be watching for this week, because clearly there is some type of a stall bias or some type of a minor pullback at the very least that these whales are expecting. It's not just one print, it's not two prints, it's a lot of prints. As you can see over here, you can see all of the premium on these orders. And again, it is weird because of how much upside there's been. If you remember the last video, I was actually looking for a little bit lower price discovery to around 540 to dip by that for a breakout back to the previous all-time high level. In this case, bulls did not waste any time and just bought the dip immediately and had this nice continuation of the upside. So again, going back to the flow over here, this is something you want to watch regardless of how bullish this not only daily chart looks, if you go over to daily, but also the weekly chart, as I could do here to show you. But regardless of how bullish this looks, and these are just cycle lines I have, by the way, but regardless of how bullish this chart looks, there still could be a minor pullback that could be due just based on flow like this. Something to look for. Again, I'm not going to take a position just based on flow alone. I need it to converge with other variables. In this case, I don't really have a specific level to base a short off of because of this flow, because right now we're at all-time highs and we closed pretty bullish, like I showed you on the weekly as well as the daily. So really what I'm going to do here is sit and wait to see how this develops on Monday and Tuesday. And is that a fun answer to say that I'm going to wait for a setup to come to me? No, but as a trader, you have to do that from time to time. Setups aren't always going to present themselves every single day. So here in this case, I'm going to wait and see how this fares. If we do see a pullback that kind of comes after we had this flow on Friday, so going into Monday and Tuesday of this week, the first and obvious level that I'm going to be focused on is around 550. Not only is that an arbitrary whole number, but also it happens to be this rejection spot over here as well as over here. We had a double top form at 550. So this is going to be a critical level. Bulls will definitely attempt to defend. There is a potential long position off of there, assuming that the hourly can hold this level. And then afterwards, there is a little bit more downside back to the previous range. Remember, this 543.98 is the top of the previous range we had here. And you can see we retested it a couple times, and most recently on Tuesday of last week, where it was able to find a support and have continuation higher. So that'd be the next supportive level after. There's a lot of support. So really, I'm going to continue with my long bias. And yes, again, like I said, there is a lot of put flow, but I don't have anything else to base a short off of other than the fact that we see a lot of puts here. That's not sufficient for me as a trader. I need to have other variables, like I said earlier in this video, to support adding some type of a short position. So at the moment, I'm going to stay cash and wait for some type of a setup to present itself. Again, ideally dip buy around 550 for a long setup, assuming the hourly can hold. Regardless of the S&P 500, what's interesting is there was actually a lot of bullish flow on the Mag 7 last week. So if you look at NVIDIA, for example, Microsoft, Amazon, those types of tickers, you could see there was a ton of bullish flow, mostly on NVIDIA, but nothing new there. Pretty consistent every single week. But you can see 3.2 million for the 460 strike, a little bit in the money here on Microsoft, a ton of these NVIDIA bullish orders. Then over here, Amazon, this 2.3 million 200 strike for the 816. Later on, there was a call sell for the July one, but in this case, it was for August. So two different orders there. The Mag 7 all broke out recently, especially Amazon, which I can show you right here. You could see there was a major breakout of a range, and I'll go to the daily chart to give you a better picture. But essentially, we were stuck within a range for a very lengthy amount of time, as you can see over here, and we finally broke above it over here on June 26th. And so far, it's been able to stay above the range and has had a form of continuation after breaking out originally from here. So this is something that is showing a lot of macro bullishness. Another one that had a very recent breakout, as recent as Friday of last week, is Meta. So here you could see very similar range structure to what Amazon had for the most part. And then we had a daily close, very strong daily close above the top of that range. So in this case, for potential trade setup this week, I'd like to see a retest of this range around 523.78, because again, the daily and weekly candle closed above that last week. That shows strength, shows that it's ready for continuation, kind of like what I just showed you on Amazon. So if it could retest the breakout, that'd be amazing, not only from a supportive standpoint, but also a risk-reward standpoint, because I know, especially if I go to the 15-minute chart here, that if we were to retest that 523 level, I'll draw it out. It's not going to be to scale or anything, but let's say we fall down on Monday or Tuesday back to around 523, I can add around here, and as long as we stay above 523.78 on the hourly, I'll continue to hold that position and look for some type of a bounce and continuation. Otherwise, if it falls under, say the hourly closes around 520, I take the $3-4 loss on that versus the potential of, honestly, I could see this going 10 plus points on Meta if it does have this successful retest and go. Now, there also is the risk that it doesn't end up retesting, but in this case, this is the best risk reward. I look for the most optimal risk reward in every setup that I take, and there's no good risk reward up here after it's already rallied for a while. So the best is around 523. You could make an argument, if you go scroll all the way back, that there is a good support around 530-ish because of over here where it found this resistance. I prefer 523.78 since that's the breakout level, but if you wanted to be a bit more aggressive, there is that 531 over here. So there's two critical support levels. And as you can see over here, based on the flow from just Friday alone, there is very minimal overall. So this is something that I would like to see experience an uptick this week. That'd be great to complement that trade setup on Meta that I'm looking for, that long continuation, because prints like this really aren't that directional, all things considered. So I will be looking for that as well. And last thing to mention, there was quite a bit of dark pool activity for a Friday, especially coming off a holiday, since typically you see lower volume. You can see here this SPY $875 million dark pool print. Remember, these are shares. This is not options order flow. So it's $875 million worth of shares on S&P 500, 554 million as well. I would assume, just based on the chart over here, remember, we don't know the exact intent of these, but I would assume based on the chart that is offloading, and it looks like I just drew a random line here. Didn't realize I still was on that, but I would assume that's offloading because you could see, again, the time that it came through, about 2:43 p.m. Eastern. Over here, this one came in right after hours, so 4:04 p.m. Eastern. Those are two hefty prints, singular prints as well. These aren't signature dark pool prints, they're singular ones. So these came near the latter half of the day, around 5:54, 5:55 or so. And this also can pair with the put flow that I was showing you earlier on as well. Again, we don't have any levels to base it off of because it is at all-time high, so it's not something I'm interested in taking a setup on. But personally, I would remain cautiously optimistic going into this week. And if we do see that setup present itself like a retest around 550, or it makes some type of another pattern or looks better a little bit near the middle of the week, then I will take a setup. But it is very interesting and at least notable, wanted to share it in the video, that there was an uptick in overall dark pool premium. 464 on NVIDIA over here, definitely a decent amount. And then these are just ETFs for the Vanguard. So overall, considering last week was a shortened week, it was very active. We'll see what happens this week. We'll see if those bears that added the SPY and QQ puts can have their wishes granted, since they haven't really been successful at all this year. But truthfully, we haven't seen this type of put flow that I showed you earlier on in the video. It's pretty rare. Only maybe a couple times we saw this quantity and this amount of premium overall hitting the tape this year, and no surprise because we've just been going up in the S&P 500 and QQQ for the most part of this year. So this is definitely something you at least want to monitor. Can result in something, but it doesn't have to. So just something to be mindful of. Otherwise, the trend is still very much to the upside, as is probably obvious if you look at any time period here, hourly, daily, etc. We just continue to grind to the upside. So that, in my opinion, is the most important factor here, because the trend is your friend, especially in 2024, because you do not want to fight the trend, as you can see. So other than that, as always, appreciate you guys watching this video, and I will see you next time.